Good afternoon, traders. It's Mark here from the day trading room. The time is 20 to 6 London time on Wednesday, the 29th of September. And I'm just doing my blog update for today. Interesting day. Got some volume back in the market, a reasonable bit of volatility. If I just bring in the 5-minute chart here, you can see the levels we've been working on the last few days. We've got this 10760-ish level up to the 10800 level. We had one probe under yesterday which bounced off a few support levels and came straight back into this range. So I'm now treating this as an acceptance range, and we've still got a bullish bias across over the over the month or so. So this is still really just a little bull flag that's holding near highs, ready to push to new highs unless we see some other action otherwise. And to see that yesterday, that immediate responsive buying come in at the lows back to these levels, is a bullish sign. But we still can't break through this sort of 10800 level on the YM. So at the moment I'm just trading these ranges. And what did we get up to this morning? Well, this morning was a perfect really day to take the gap trade. We'd opened around the 10771 level and the gap was 10789, so there was enough meat in that trade to take. If it had pushed straight up off the open, I wouldn't be interested in it. I want to wait and see some strength. So really we got the perfect setup. We came down to our 10759 level, which was the support from several days ago. That little range I just showed you on the 5-minute. The overnight low was 10753, so there's a nice little cluster there of support, and we were looking for some buyers to hold at that level. Obviously yesterday we got that flush straight through, which I took a stop on yesterday, trying to look for that buy around that level. So you've got to be careful. But when you get this pattern, you've got a tail on the candle which closed, so that's signifying that, okay, great, that candle's done. 1-minute bar, a tail that's probed into our little level of support here, the 10759, the 10753, and then has started to push back up. That's a great long. It's a great risk reward trade. There's the obvious target of the gap fill. There's an obvious stop point which is just under that low. We don't want it to go back under that tail. If that tail truly is a tail, then the price won't revisit that level at all, let alone go under. And so you've got a nice risk reward there. You've got an obvious target of the gap. That's going to bring also the first 15 minutes within our 30 points or more move that we like to see on the Dow. So it sets up nicely. So it's a sort of trade that you can take with confidence. You've got your risk is quantified, you know where you're coming out, and you can scale perhaps once before you get your final target. But it's one of those trades that you should really hold on to because you've got everything swinging in your favour. So that's what we did first off. The long was about here, it's slightly later than I'd like, but having taken a 13-point stop yesterday from the open, trying to take the trade, I just wanted a little bit more confirmation, and that was it. We just saw that candle and just got that pullback, and it was just on that little red candle here. It was the long. Pushed up, a nice first scale at 19 ticks, and then I got 24 on the last. So great start to the day, and the market then decided to curl away from that, which is just cementing even more the significance of this level of this 10800. I've got it at 10793, but it's you've got to take it with a pinch of salt, sort of 5 to 10 points either side of it. So you look at it like that really when you're looking at your support and resistance levels. So that's just cementing these levels even more. And as we failed to break through there, a lot of people were saying, let me just clear these drawings out. A lot of people were saying, okay, well, I'm now looking for the break lower. Now let me tell you why I don't take that trade, and this is something that I've even written down in my notes today, because I actually considered taking that break trade, but I stopped and thought to myself, there's no reason to take the break. There's no real volume here. The volume's relatively low. Okay, we failed to break through the high, but why are we going to break through the low? The risk reward is skewed. Okay, we've got some great downside targets on the 5-minute. We've got 10700. We've got yesterday's low, which was to about the 10,665 level. So there's plenty of downside targets. But because the targets are so far, why not wait until you see it break, you see the volume increase, you then wait for that pullback, perhaps to the break level or to a moving average, and then take the momentum in the direction of the trade. To try and second guess breaks is the easy beginner trade. It's the sort of thing that everyone learns, taking the breakout, and it's often the thing that sucks people in the most and actually causes the sharpest and the reversals and actually the best trades, the fake outs. So, and also you've got to remember that we are on an uptrend at the moment. On the 60-minute and the daily, we're in an uptrend. We're near highs. So taking breaks to the downside, the risk reward is so skewed. You've got to have your stop at least above the midpoint. And where's your target going to be? Unless you're seeing a reprice from something like data or some significant volume pushing the market, there's no reason at all to take breakouts against the trend unless, as I say, you see a really significant volume. So, I didn't get involved in this, and I didn't fancy either a buy. We started to form a little bit of a bull flag here, and it's this sort of similar situation. It's slightly less risky because you're trading with the trend, but why look for a break? I'd prefer to be buying at the bottom of ranges looking for a push through than I would at the top of ranges hoping for a break, because the risk is so much more. And so that's what we got. We actually got a push back lower, which was great. I mean, at this point I wasn't quite sure whether this was actually the break that we were going to get lower, or it was just a fake out and we were going to continue higher. So that's why it's very important to just to wait, to let the market show you what it's doing. And as it happened, it was nothing. I mean, the volume was low, very insignificant. We'd had higher volume bars up here than we had through here, so it's not bringing in anybody. And pretty much as we'd poked through the low, the buyers were pretty responsive and pushed it straight back up to that VWAP. We had a little bit of pause, a little bit of chop, and here's where it becomes a little bit indecisive. But it's also where it sets up a fantastic little trade. You can see I've drawn the downtrend line in here, and you can also see now we've got a significant support level here around this level, and it's sitting in it. It's sitting at the support. And so what we want to see is these sort of bottoming patterns, which are tails, and it's exactly what we got. We got a blow through by a few ticks, and I say a blow through. I mean, it probed through very gently. The ticks didn't go to low. We had a few ticks lower on the actual price. The volume wasn't significant. There was no new buyers coming in, and so there you've got your high risk reward trade. It pops straight back up. You can take a little long. You can wait then even for that trend line to break to add, and that's what I did. I waited. I took a small long there, and there's my stop. I've still got my lips in from where I ordered my stop. There's my stop under that low. You do not want it pushing for a fourth time. If it's a genuine tail candle, which it would look like on the 15-minute, you don't want it pushing again. So you've got a really good risk reward trade. I know, what's that? That's about 15 ticks or so, 16 ticks. But where's your targets? Well, your obvious target's going to be the back and top end of this range, just before that, which is what this ellipse is here. And then you've got a free trade. I mean, you can scale out on your way up if you like, and this is exactly what I did. I took my first scales out of this VWAP, and then I was looking for more, and it becomes a risk-free trade. But the point is looking for those high risk reward trades. That's a very low stop, considering you've got potential for it to push up. You can scale out here, and it's going to probe here, and you know what, you can hold a little runner looking for fresh highs. If you think that that's just flushing out the last of the buyers, there's no sellers responding to that, then you can hold for highs, and that's what the general my strategy is to look for those trades. There's often times when I'll look at a market and go, I think it's going to go to there, but if I can't see a good entry that gives me limited risk and good quantifiable risk, I won't take it. Very often I'll look at a market and say that looks like it's going to push to highs, looks like it's going to push to lows, but unless I can find a good entry point that gives me good low risk, then I won't take the trade. And that's what you're looking for here. We're expecting it to push back up to the top end of this range, but there's no good entry point, there's no good place to take the trade. Here for me was too much of a chase. The risk is too much. I don't want to risk, what's that, 30 ticks. I don't want to risk 30 ticks to make 30 ticks. Okay, it's feasible, but I want to really find those where my risk is limited and I can increase the size accordingly according to my risk. And then we've got the perfect little setup there, little probe lower, responsive buyers, and then you're in. You can have a little test, and then you can add on a bit more confirmation, and you've got your stop there. Excuse me. And then it's a case of being patient and waiting for your targets to be hit. Your first scales, your second scales, your last scales, and if you fancy a runner, you can hold it without without panicking too much. So that's what I got up to today. What am I going to do this afternoon? I'm just going to look. I'm going to see if there's any more volume coming into the market. I will look for a break of these levels. If we see some good volume and we start to take out the highs, I'll look for a pullback to go long. Similarly, if we start to take out the lows. But while we're in this range, I don't want to get involved. I want to see the good risk reward trades. I want to see good setups, and I'm going to wait for those. Don't forget, it's the end of the month tomorrow, so don't do anything silly. I've got a big message on my notes here saying, keep cool, keep calm, don't get caught up in anything. Put another good month under the belt. It looks like October and November should give us some volume and some good opportunities. So if we just be patient, wait for those opportunities, then the profits will take care of themselves. Welcome your comments on the videos, guys. Thanks for watching. Hope that's helping anybody. I'm just literally putting my trading journal onto YouTube now instead of writing it down. Put it onto YouTube. Easier to document, easier for me to go over, easier for me to improve, and hoping some of you can learn something as well from my coming up to 10 years experience trading. Have a good day, good trading, guys, and we'll see you soon.